everybody, and welcome to today's webinar on the Oasis Risk Platform for Asia project. Today's presentation is the first of 4 that we're going to be doing in a series which will take you through the fundamentals of catastrophe risk models, inputting data for analysis, running risk models, and before getting into more technical topics such as installing the Oasis platform, the architecture, and the Philippines flood model, which is being delivered as part of this project. My name's Claire Souch, and I have 20 years experience of catastrophe risk modeling in the reinsurance industry. Over the last few years, I've led various global initiatives to improve the understanding and management of disaster and climate risks. I was previously the global head of model development at SCOR Reinsurance and Senior Vice President at Risk Management Solutions. I'll be joined later in the presentation by Matt Donovan. After completing a master's degree in remote sensing in 2008, Matt has held several CAT modelling and exposure management roles at RMS, Willis Re and AIG, and he spent 5 years heading up the exposure management function at Lloyd's of London Syndicate, DTW 1991, before joining Oasis last year. Please do submit questions using the chat function. At the end of the presentations, we'll answer as many as we can in the time available, and we'll follow up with written responses on the others after the presentation. A recording of this presentation and the slides will be made available afterwards, and the link emailed to you when it's ready. So today we're going to be covering the following topics. I'm going to be giving you a quick overview of the project and the components of a CAT model. And then Matt will take over and talk about input data to catastrophe modeling, the importance of data quality, exposure, input data, hierarchy of data, and what we are using in Oasis as an open exposure database, which provides standards for the collection of data, which will be modeled through the Oasis platform. As a quick reminder of the project, and I think many of you will have been to one of our workshops or launch seminars that we've been able to hold so far in Manila. The project started in July 2018, and it's funded by the German government International Climate Initiative of the Minister for the Environment, Nature Conservation and Nuclear Safety, and it's due to complete by the end of 2020. The goals of the project are essentially to provide open tools for risk management and climate change adaptation decisions to help government, businesses, homeowners and farmers manage the increasing costs of disasters. The project will deliver models required to quantify the costs of disasters. We're co-developing an open catastrophe risk model built through international standards. And this co-development is being done between very experienced organizations in Europe and local institutions in the Philippines. It's a public-private partnership, so we're bringing together business, academia, national agencies together to solve the problem of increasing risk from cyclones and floods and so on. And we're developing, through the project, we're developing in-country capacity and ownership for climate and catastrophe risk modeling for the long term. So all of the tools that we're developing will be given to the country for long-term further development and ownership and usage for free. The Oasis Loss Modelling platform itself is a not-for-profit organization. So we are leading this project and coordinating all of the work of the various different collaborators on this project around the world. It's a not-for-profit organization. Itself was created in 2012 through a public-private collaboration. Insurance industry has put a significant amount of money into it, along with other public bodies, such as the European Council. And the platform gives the ability to plug and play hazard, vulnerability and exposure into a standardized loss modeling kernel, which calculates economic and insured losses, EP curves, average annual losses, and gives them a quantification of uncertainty, which are the metrics required for economic and financial risk analysis and risk transfer. So these standardized modules and metrics make it feasible for anybody who, without specialist knowledge, to build and implement and run catastrophe models to be able to quantify the economic impact and potential insured losses from natural disasters. The platform, the software, is free to use by anyone. You can download it from GitHub, and here's the link if you want to do that. And we are posting more information about it all the time on the Oasis website. Now, using a platform and models such as the Oasis platform provides the data and analysis necessary to understand risk, and upon which a risk management strategy can be developed. And we did a case study last year in association with the Insure Resilient Solutions Fund, which gives an example for a specific country of how you can use these models to provide an economic climate change adaptation analysis. The analysis provides vital information to quantify the cost benefits of investing in physical risk adaptation and reduction mechanisms such as flood defences. However, not all physical risk can be completely removed. And in that case, financial adaptation measures can be effective in capping losses of the risk bearer, providing rapid funds after a disaster, and also sending strong pricing signals on the benefits of risk reduction on premiums. And all of this is shown in the case study that we did last year, and will also be possible to be output at the end of this project for the Philippines. Robust climate risk analysis and models are required to do these analyses. And we found that open platforms enable these sorts of risk models to become mainstream and accessible to governments, the public sector and NGOs, as well as the private sector. And it's this open source platform that's needed to spur action across all of these different actors that need to come together and work together to solve the challenges that we're facing with increasing risk from climate events. So that's really the focus of this Oasis project for the Philippines. We are here to democratize the use of catastrophe models. Now, catastrophe risk models are a very specific type of risk model, which were developed by the reinsurance industry over 25 years ago now, to measure, price, and transfer risk from extreme natural disasters. They underpin the global flow of risk capital, and they provide standard metrics through which organizations, governments, anyone really can assess and quantify the economic impact of extreme events for whatever it is that they're interested in. So the catastrophe models and the Oasis Loss Modelling framework provides this standardized framework for hazard, that would be the flooding, the vulnerability of exposure to that hazard, and probabilistic loss analysis, which enables this quantification of economic impacts on an extreme event probability distribution. And it's that probability distribution that enables financial risk management mechanisms to be structured and to be organized. But today's paradigm of commercial catastrophe models puts them out of reach for many, and certainly not accessible to the public sector. And often we see that catastrophe risk analysis is limited to providing snapshot, static risk analysis by third parties. What we want to do through this project for the Philippines is to change that. And our goals are to democratize catastrophe risk models to enable anyone to use the science and data locally to develop models, to sustain and to update those models in the country for an ongoing dynamic view of risk and decision making, and to keep running the models with new data and new information so that that view of risk is kept up to date for decision making, which has to be done on an ongoing basis. And our vision for this project is that all of that would happen within the Philippines from after the end of this specific project finishes at the end of this year. So I'll briefly take you through the components of a catastrophe model, and then we'll hand over to really get into the topics around input data on exposure analysis for the rest of this webinar. So the components of a catastrophe model start off with identifying what is the hazard. We start off by defining an event set. For the Philippines project, we are modeling flood risk across the whole country. So the event set will be tens of thousands of simulations of possible rainfall events, extreme rainfall events all over the country, with their intensity of rainfall, footprints, and their probability of occurring. Each of those events will have a very detailed hazard flood footprint associated with them, which will show in high resolution where the flooding is. These footprints take into account things like flood defenses, and the toolkit that we will release will enable users to input new information on flood defenses into the modeling and into the calculation of the hazards, where that information becomes available and as flood defenses change over time. And then we have vulnerability curves for different building types, which relate the hazard experienced by that building, the level of flooding, to the damage level. And then finally, we have a financial module which calculates the standardized metrics for loss. They enable the application of insurance and reinsurance policy structures, but it can also be used to quantify economic losses without the impact of any insurance. So you can use it to understand what the total potential loss from events, flood events striking the country could be, and you could use it to test the impact of putting in new flood defenses, and you could use the model to therefore then impact what could be the impact of insurance or reinsurance on potentially capping those losses. And a really important input to these models is what is the exposure? And that's the focus for the rest of today's webinar. And this information is input by the user of the model. So this is the information about the location and the characteristics of the assets, or it could even be people who are exposed to the flooding risk. And so with that, I'm going to hand over to Matt, who will take you through the rest of the presentation. As I said previously, please do submit questions on an ongoing basis via the chat, and we will address as many as we can at the end of the presentation. Thank you very much.
Thanks, Claire, and welcome everyone. I'd like to start talking about the importance of data quality. And I think it's stating the obvious here, but I think it's important to mention that, as with any model, rubbish that goes in is going to produce rubbish on the outside. So CAT models are very sensitive to the data that goes into them. So we always recommend collecting the most accurate and complete data as possible, because like I said, rubbish that goes in will produce rubbish on the other side. So when we talk about data quality, I'm referring to essentially the building or risk information and address information and building characteristics of the data. And better data quality does not guarantee a lower model loss. What it does, better data quality just ensures a more accurate representation of your risk and essentially the loss. And the better the data quality, it reduces the need to rely on any assumptions that are built into a CAT model, and therefore reduces the uncertainty. So just looking at an example here, as you can see, this property is still standing after a significant hurricane in Florida, and this property actually underwent some significant renovations to incorporate upgrades for superior hurricane protection. And as you can see from this photo, those upgrades were successful. So this is just a good example of how important it is to really capture as much data as you can about the property and about the risk, because it is going to significantly affect how it is modelled and essentially affect the price of insuring it. So I'm just going to now talk about just fundamental inputs of exposure data, and I'm going to go through these in more detail a bit later on. So essentially, we have the location information, your county, state, country, postal code, lat long. Then we have the values, which are your building's content and BI values. Again, I'll go through in more detail. You have the construction of the property, what the property is, so the occupancy, the year built, which is the age, the number of stories or height, and any other information that goes into the model. So let's start by talking about location information. And this is, fundamental and mandatory data that needs to be imported into a CAT model for the model to be successful. So you have your street address information, your postal code, city, county, state, depending on which country you're in. And these are used for the process of geocoding. So geocoding is assigning a lat long or the closest lat long coordinate for that risk. And that's going to determine where the model puts that risk or models that risk. So having different data quality and having gaps in your data will lead to different geocoding resolutions. And these will obviously have a very significant impact within the model, and it will affect your model losses. So when I say geocoding resolution, if you just had the name of the street and not the actual specific building number, the model will likely put the lat long in the centroid of that street. And if it's a large street, a main street through a city, for example, and is a couple of miles long, one end of that street may be closer to a river network. So therefore is going to be more hazardous and more prone to flooding than the other end of the street. So it is really important to get the best data quality in the actual lat long of that building number on that street. And as Claire alluded to previously, it does affect the hazard that is modelled for that location. So I've just put some examples here on this slide of how it will affect earthquake risks, so different soil types in different locations, liquefaction and landslide risk. The wrong geocoding could lead to incorrect distance to coast information, land coverage, topography, which will inevitably affect your hurricane or typhoon losses. And then with flood, it will change your distance to any water body, another land coverage, or even different flood defences in that area. So as you can see, these are all impacts of having wrong or not as accurate location information. And we always say the best geocoding resolution is the lat long for that actual building. So we've got an example here. This is a UK river network. So we've got 3 different points based on their geocoding resolution. So the one furthest away is using the postcode sector. So it's only been modelled for the first half of the postcode, which is a much granular area. And as you can see, it's further away from the actual hazard, and it's resulted in a 0. From there you can see AAL0 modelled loss. The next closest has used the 6-digit postcode centroid, so that's gone a bit more detailed and used the whole of the postcode in the UK, and we are getting closer to the hazard, and that's resulted in a slightly higher modelled loss. And the one we've got closest to the river is actually the coordinate location. So for this example, it's actually the correct pinpointed risk that we are modelling, and as you can see, it's right on the river, and it's resulted in a higher modelled loss. So just a basic example here to show, again, highlight how important address information is in your exposure data. So I'm just going to move on to looking at the input data in a bit more detail. So we have total insured value, your TIV, sometimes also known as the total sum insured, or TSI. These are both the same thing, but used interchangeably. So your TIV is your 100% ground up replacement cost for all of your coverages. This is used for your economic losses, the complete rebuild cost of a property. And this is split into your 3 different coverages. So your building, as it states, is your rebuild cost of the building. Your contents is the replacement cost of any contents within that building. And then you have your BI, which your business interruption. So this is mainly for your commercial properties that have lost income, who aren't able to trade or manufacture their goods, so they're actually losing income. And this is usually based on an average annual income. So just more on exposure data, construction and occupancy. So construction, you know, what the building is made out of, and each different construction will have a different vulnerability function in the model, which again, Claire mentioned previously. So as you would expect, a wood frame building is going to be a lot more vulnerable in a cat event to a steel frame building, and the same with masonry versus a reinforced concrete building. And it's the same with occupancy. So different occupancies will again have different vulnerability functions in the model. These are split by your residential, which are your single or multifamily dwellings, you know, your house or multifamily dwelling, a block of flats or apartments. Commercial will be anything from retail, wholesale, trade, anything professional or technical. And then your industrial, which will be your heavy and light fabrication, your technology, anything like that. So I've just got an example here. This is the graph. This is showing some curves, some mean damage ratio curves against wind speed for each of 4 different constructions. And as you can see, again, as expected, the solid black line, which represents the wood frame building, is showing a higher damage ratio against wind speeds compared to the dashed line below it, which is your reinforced concrete. But as you can see, from the lower wind speeds, anything sort of below 70, 80 miles an hour, the constructions actually behave fairly similarly during an event. It's only when the wind speed really starts getting more severe, up to 100, 110, 120 miles an hour, that you see the curves split, and each construction does start to behave very differently when the winds start getting really severe. Okay, so these are more fundamental important exposure inputs. So your year built, these are your the age of construction of the building. These are usually put into bands, and these bands will differ depending on the model you're using and the region you're modeling. Here are just some generic bands covering, you know, the last 100 or so years. And that's the same with building height. They're put into a number of stories into bands, and again, those bands will differ depending on model and region. And as you'd expect, usually in a model, the older the building, the more vulnerable. And again, the higher the building is more likely to be more vulnerable, certainly during a quake with ground shaking. I'd like to briefly talk about secondary modifiers. Now, secondary modifiers are the next level up in detail for exposure data. They're more prevalent in the US, but outside of the US, a lot of this data isn't really captured extensively. So we don't see a lot of secondary modifier information just because the information isn't available or isn't delivered to the underwriter. So what they can have fairly significant impacts on your model losses, and we start looking at quite detailed information. So for example, the square footage, you know, do we know how big the building footprint is? The roof type, so is it, what type of roof is it? The geometry, is it flat, is it gable, is it a hip roof? How old is the roof? Has it been replaced recently? What is it covered with? Tiles, felt? All of these are going to have impacts on your losses. And then we can also look at roof anchors. So it goes into detail of size and placement of nails. You know, are the nails bigger? How is that roof anchored to the actual building? Window cladding. Windows are usually the weakest and most vulnerable part of a building. So are they covered? Can they be protected from missiles during a typhoon or hurricane? Sprinklers, they can reduce losses to fire following earthquakes. So during severe ground shaking, some burst gas mains might burst, causing fire. So sprinklers can help. Has there been any refurbishments or updates to the construction? A bit like the example I showed previously in the hurricane. And also basement, you know, does the building have a basement? Because that's likely to be the first part that's going to be flooded. So now we've talked about data quality and how it impacts the model, I'd like to just talk about hierarchy of data. And this is how the model takes the data and looks at it at the different levels. So we start with the location. As I've said, you know, this contains all of your individual address and construction and occupancy information. And it's made up of your different coverages. It's worth mentioning at this point that at a location such as a university campus, there are likely to be a lot of buildings on that campus at that one location. And it's probably unlikely that you would have specific detailed information on every single building. So what you can do in the model is just enter the number of buildings at that site, whether it's for a campus or an industrial site, and all of those buildings will then come under the same location. So the next level up is a policy. So a policy is a specific type of financial structure that applies to one or a set of locations. So a good example would be to think of an insurance policy for McDonald's, say, and that policy might cover 10 branches of McDonald's around the city. But the financial terms of that policy might affect one or some of those branches of McDonald's. So one branch of the McDonald's might be closer to a river. So there might be specific policy or financial terms attributable to that specific branch. The next level up is an account. So an account comprises of a group of policies and locations, and this is where primary reinsurance structures can actually start to be applied at the account level. And then the final level is the portfolio. So the portfolio is your generally highest level of data, and this is comprised of a number of accounts, sometimes thousands of accounts, and with large books of business into millions of locations. At the portfolio level, this is where we can see where the main reinsurance or the large cat layered reinsurance structures are applied to cover losses at an event level. So this is just a slide to show as a schematic what I've just been explaining about hierarchy. Hopefully it will just clear it all up in case that wasn't clear. So if we look at the green boxes, which represent your locations, they're made up of your buildings, contents, and BI coverages. You then have multiple buildings that feed into a policy, and then you can have multiple policies into an account and multiple accounts into a portfolio. So hopefully that sort of is quite clear. Okay, so I'm now going to get into a bit more detail about OED. Now, Claire mentioned it at the beginning of the presentation. OED is the open exposure data format used in Oasis across all models. So it's the market's first cat modeling open standard. And it's curated and managed by a steering committee made up of participants from around the market, from brokers to vendors to insurers and reinsurers. And so it's not owned by a single commercial entity for their own commercial benefit. It's actually a market-wide initiative. And the great thing about OED is that it's consistent across all formats for all models, and it's completely model agnostic. So OED is important because for the last 30 or so years of cat modeling, data formats, both inputs and outputs, have been proprietary, which means they're specific to each model vendor. Now, this has proved, and it is proving, more problematic as time goes on, and it's very inefficient, especially when it comes to transferring data and results across models, especially when you're performing modeling analytics and you're using different outputs and inputs for different models. So OED makes processing and the workflows and the transferring of data a lot more efficient and transparent. And I'm going to go into it in a bit of detail in a second. So essentially there are 4 input CSV formats, and most of you will know CSV, is the usual format in Microsoft Excel. And it comes with data specifications, which I am going to go through. And these are all available on the Oasis GitHub page. So I'm just going to talk about the different input files. So again, the first one is the lock file, or the location file, has all of your address, occupancy, construction information. And this is the only compulsory input data file that's required to run a model in Oasis. And this will produce your ground up losses. And the ground up losses, as we stated, this is the financial perspective that would be most likely used for your economic losses for and by the non-insurance sector, so by government agencies and local authorities. The next input file is your account file. Now, this is your financial file. This is going to have all of your policy and your account financial information. And this file is modeled in addition to the location file to produce your insured losses. So anything net of your financial terms and your policy terms, which again is probably a bit more focused for the insurance sector who want to see the impact of their policies. And then we have 2 reinsurance files. the info and scope. Now, these will have the specific details of the application of the reinsurance structures that you wish to apply in the model. So all of your attachment points and layer information, reinstatement information. And so you need all 4 of these input files to actually model and calculate your net of reinsurance losses. I now would like to go into some detail. If I just go over to Excel, hopefully you can see this okay. So this is the data specification reference file that is available on our GitHub. And this is the sort of, let's say, the Bible of OED. So I'm going to start by going through a few tabs. Now, I understand it's a little bit dry and difficult to follow the CSV over a webinar, but I think we spent a lot of time talking about data and data quality. So I think it's quite beneficial for you guys to see exactly what it looks like and to realize that it's actually not that complicated, and it's not that difficult to follow. So I'm just going to look at the OED input field here, and this is your data specs. So from this first column, it's actually separated into the input files I just mentioned. So if I filter and just look at the account file now, these are all of the possible column headers that are available in the ACK file. And as you can see, there are quite a number of them. So there's quite a lot of information there. But if we filter on the required field, we can just filter in what is required. So R is required. And these are the basic mandatory fields required to model data in Oasis. And it has your description here. So it's just portfolio and account number, currency, and your policy number. If I then filter back to optional, these are all of the more detailed fields that are available, and a lot of them will be used in most of the models. So some models will cover this information, some models won't. So it all depends on what model you're using. If I then start filtering and having a look at the lock file now, again, if I just show the required fields, you'll see here, these are the fields we started talking about earlier. So you've got your country code, perils that are covered, and then your coverage TIVs. So these are the required headers and associated descriptions that are required in the location file. And again, if I just put in optional as well, you start seeing all of the other fields that are going to be present in the lock file. And you start seeing all of your occupancy and construction information and all of your number of stories and year built in there. So I'll just show you a few more tabs of this specification document. So the next tab is your peril values. So there's a 3-digit code used to represent a peril in the models. So you've got your earthquake and your tsunamis. I'll come back to occupancy and construction in a minute. Currency values. So we use 3-digit currency codes for each country, and depending on what currency you want to model in. We use 2-digit ISO codes for country. And then we look at different smaller areas within each country. So for you guys, if we just, filter on the Philippines, PH, you can see these are all the areas that are covered in the models for the Philippines. So I'm going to go back now and just have a look at occupancy and construction, just because we spent a bit of time talking about it. So here is the construction tab. Now, what we use when we put construction and occupancy information into the model is what we call codes. Now, these are classification codes that are assigned to different constructions. So as you can see here, 5050 is the code for a wood frame property, and you would have the associated description next to it. And if we go to 5100, it's general masonry. And then we start having a lot more detailed constructions and subcategories around that. Concrete and steel, and we can start going into detail. And it's the same for occupancy as well. So we use these codes for our occupancy. So you can say 1050 is your general residential and 1100 is your commercial. And again, these will come with detailed descriptions of what each occupancy and construction is. So if you have a certain occupancy or construction, you can look at these codes when you're importing your data. So it's got a few minutes. I'm just going to finish off by showing you a basic example of an ACK, of an account and a lock location input file. So here, as you can see, it's not much data. It's a really basic file. And this is essentially one account I'm going to model. The account is called A1, but there are two policies associated within this account. We're going to model it in British pounds, and it's going to be WW1, which are, if you look at our peril codes back here, WW1 is windstorm with no storm surge. And here is some layer information for each policy. So this is just a basic example of an ACK file. Now, if we look at then the associated example for the locations, you can see it's still portfolio number 1. Our account number is A1, just like it was in our ACK file. But we have 10 locations under this account, all in the UK. And they have, for this example, all of the lat longs for that building, and also the associated street address and postcode in the UK. Now, there's some construction and occupancy information here. So code is 1050. If we just have a look and see what that code is, you can see 1050. These are just general residential properties in the UK. And if we look at our construction code, 5100, we can see that these are general masonry buildings. They're built around 1990. Again, these are just examples we've come up with. Number of stories, so they're just a 2-story house. There's only one building within that location, so it's not a university campus. It's not a location that has multiple buildings. There's just one building at that location, and they're all being modelled for WW1, which we know is windstorm with storm surge. And then finally, you have your associated building other contents and BI all in pounds. So this example is all of your just building information. And so this is it really. This is just a basic example of the majority of the fields you will see in input files. And again, like I said, it's not the most interesting, exciting thing to look at, but I think it's quite important to see that the data isn't actually, in most cases, that complicated and sophisticated. It is, just some pretty fundamental exposure information. And that's all I wanted to present and talk about. So if I could hand back to Claire, see if we have any questions, and I'll just go back to the final slide and hand back to Claire.
Thank you, Matt. One of the questions we've had which is very, very appropriate for other things as well. The question is there a CAT model for large destructive earthquakes? Now, for the Philippines specifically, this project is focused on climate risk analysis and the development of a countrywide flood model. Now, the earthquake models have been created by other organizations, but not in the catastrophe model framework format that we've described today. So for example, there's an initiative, a not-for-profit initiative called the Global Earthquake Model, which has developed probabilistic earthquake models for the Philippines. Now, this could be converted to the CAT model format in Oasis using the free tools that we are making available through this project. And in fact, that applies to any type of hazard in the country that you could think of. And what we're seeing happening in the UK and in Europe is we're seeing universities and scientists and national science agencies make their hazard information available in this format by using the free tools available to convert their hazard models into a CAT model framework, into the standards that we've described, and to partner with other organizations to create the vulnerability curves that are required and plug those into the Oasis framework, so through which you then produce a CAT model. So we very much hope that this project, whilst it's limited in the funding and the time we have available, we're providing these tools which will enable other models to be built after this project finishes for these other perils. Okay, so we've got some other questions coming in. So there's another question about whether the data is protected, are the data recorded and kept in a central repository? And by this question, I assume that this is meant to be talked about the exposure data that Matt was talking about. So there are a couple of different ways of doing this. That exposure data can be kept locally, but by the person or the organization that's conducting the risk analysis. So the exposure data can be kept protected if that is needed because of the type of data that it is. If it's very personal data, for example, or sensitive data. Or there can be collaborative efforts to build public exposure data sets that are shared publicly and open source as an input to these CAT models. Now, we will be producing a high-level exposure database as part of this project. It won't have very detailed data as part of it, but we hope that that will provide the basis for more detailed data sets to be created and used. And as I say, they can either be publicly shared or they can be locally stored and shared. It's really up to the end users to decide that. There's a question about the need for training. Do you need formal training or certification to carry out the inventory to complete the data in the CAT models? And the answer to this question is that it is not a requirement to have certification. There are some CAT modeling certification schemes running now in Europe. The tools are designed to be used by anybody. Now, of course, there does require, you do need a level of knowledge and expertise to use them correctly. And so we're providing the same level of training as happens with the certification schemes that are running in the UK through this webinar series. There's another question about whether the hazard analysis and probabilistic scenarios take into account climate change projections. Are RCP scenarios being incorporated into the various hazards? So what we are doing and what you can do is that you can build these hazard models on any time horizon that is required. What we're doing for this project is we are starting with the current climate so that the risk analysis will be today's risk levels and the amount of, and to the degree that climate change is already having an impact on the climate, that will be incorporated into the CAT model that we're producing today. And then one of the partners in the project, the Potsdam Institute, is also running some future climate change projection impacts on flood, from which we can create a second version of the model, so a second different event set, and you can compare the current hazard analysis and risk analysis to future risk analysis. And that can be done, as I say, really for any time horizon that's required. Another question was about the focus of the exposure analysis, and that the point was made that the focus of the exposure analysis that we've described today was the built environment. Are there plans to include other assets and resources such as natural resources, agricultural protection areas, etc.? And again, what we're doing in this project is, as you say, is focused on the built environment. We do not have sufficient time and resource in this project to do agriculture, but we can provide advice and training on how that can be done. And these CAT models can be adapted to other exposure types, and that's been done in other parts of the world. There are good examples there. And essentially the hazard would be, calculations would be required to be different, and the vulnerability calculations would need to be different, but we can use the same framework and it can be done. And as to my point earlier, what we hope will be stimulated through us providing these tools is that these types of projects can be initiated after the completion of this one, using the same framework and using examples from other parts of the world that this can be done in future projects in the Philippines. And there's a couple more that I just want to pick up here, and then I think we will have to leave it at that for the day. Another one is the characterization of the building, as in the Excel template, fixed and universal, or can it be defined and tailored to the country context? And actually, I might ask Matt to come back on and answer this question.
Yeah, thank you, Claire. Assume you can all still hear me. Yeah, it's a good question. The OED is actually quite extensive, and so it does, or we do try and cover, 99.9% of the different options. It can be tailored if it needs to be. So it is an open exposure database, as it states, and it is open to be tailored specifically for countries. But like I said, I think unless there are some really obscure, quirky characteristics of a building, I think the OED at the moment would, or I'd like to think would cover, like I said, the vast majority of those cases. But yes, it can be tailored if necessary.
Thank you, Matt. One other one we have is it possible to make a model that takes into account multiple perils at the same time and therefore allow for analysis on perils interaction? And yes, absolutely it is. So there are, for example, CAT models elsewhere in the world that have, for cyclones, they have the wind impact and the flood impact and the impact of the storm surge. And what you do is you create an event set that has, each event has a different hazard footprint for each of those. And then you have vulnerability curves for each of them. And then the loss modeling engine calculates, has rules about how the damage from each of those is added together. Because of course there are interactions, as you say, between the perils, and the sum of them is not always, the total impact of all three is not simply the sum of the three. So yes, it is possible to do that in these CAT model frameworks. And then one more question we've had, which is the model already accepted by major reinsurers for treaty negotiations? Well, the model hasn't yet been completed, so it will be delivered this summer. We work very closely with major reinsurers. We will have to go through they will go through the process of testing the model and looking at the results of it. I think the fact that it has been developed with local data from the Philippines, so we've had very close involvement from Pagasa, from the University of Philippines, from reinsurers in the country, from NatRe, and we're using data from the country to develop and calibrate the model. That means that the model will much more readily be accepted by international reinsurers for treaty negotiating. So I think that we've had a couple more questions come in, but what we'll do is that we'll write responses to all of these and circulate them out with the slides and the recording. And I want to thank you all for joining today, for your interest in the topic and the project that we're doing. Our next webinar will be in May, and we'll go into running models in Oasis and using the output of these CAT models. There's some information you can access in between. As I say, we'll release all of this material and the answers and the questions. Afterwards, you can contact the Oasis team via the website. So if you go to oasislmf.org website, you will find a contact email there, and you can send further requests and questions through that. There's some videos on YouTube, and there are the websites that we discussed and showed you the links to in the slides on GitHub, Oasis LMF. So we really want to thank you for joining the webinar, and we really hope to see you again in May, and we'll confirm the date and time of that shortly. And please do get in touch with us either via NatRe or the Oasis team directly. So, and we wish you a good few weeks in between then. Thank you very much.